Hello kind people of YouTube and welcome back to another video, just a normal market and news update from me today, and let's jump right into it. Let's refresh CoinMarketCap to have the latest data here. And today, after what has essentially been 2 weeks of stability, incredibly low volatility, of probably the lowest volatility we had seen in over a year in the crypto markets, finally we got some movement. What a lot of people had been anticipating was that we would see sharp movement up or down following this narrow trading range, but rather than a sharp movement up by a couple percent that a lot of people anticipated, we saw the opposite. We saw the crypto markets crash down by about 3% on average today. Now this happened a couple hours ago, and if you're looking at the 7-day graphs here, we can see every major coin, the exception here of course Tether, which is meant to be tied to the US dollar and thus doesn't follow the same market movements. Every single coin in the top 20 has fallen. I believe the lowest here is Monero, which has fallen 0.07%. But most of them have fallen between 2 and 5%. Bitcoin 2.05%. So the market's significantly down today after we have now broken out of that narrow trading range that we had been in for a relatively long time. And we see here market cap in total is now down to $203.5 billion US. Yesterday we saw it at 208, almost 209 billion. The 24-hour volume, as we're seeing a lot of movement in the markets, is of course up a bit at 11.5 billion, up from around 9 billion where it had been a couple days, and Bitcoin is falling slightly less than most altcoins, which means its dominance has increased over yesterday. We now see Bitcoin dominance at 54.1% as opposed to 53.6% if I remember correctly from yesterday. Now the worst does seem to be over, with some coins seemingly starting to recover a tiny bit, but we will need to wait for a while to see what exactly is going on here. And it's very hard to tell right now if we will see the markets fall any further. But let's read an actual article, an actual market analysis of that looks at everything in more detail. Now, all the articles that I'm gonna talk about in this video are of course linked in the description. In the description you also find ways to support this channel, you also find my social media pages and an email address where you can ask questions for a potential question and answer video if you feel so inclined. But let's read this together, shall we? Crypto markets are seeing the first momentum in a while after a period of market stability. Virtually all of the major cryptocurrencies are in the red today, with some seeing losses of between 4.6%, as Coin360 data shows. And here we have this image where we see all the major cryptocurrencies very much in the red. Bitcoin is trading at $6,352 at press time, seeing an almost 2% loss on the day according to CoinMarketCap. Having traded sideways throughout the week, the top coin today saw a vertiginous price drop, plummeting from its $6,480 trading range down to about $6,350 in the couple of hours before press time. Earlier this month, Bitcoin had achieved a 17-month low volatility rate, recording its highest level of stability since mid-2017. The trend had continued over recent weeks, excepting one short-lived spike on October 15th. Volatility and the lack thereof had become a staple on crypto Twitter, with prominent crypto commentators quick to underscore Bitcoin's new quasi-stablecoin status. Senior market analyst Marty Greenspan from eToro joked on October 24th, "Hey stock jocks, tell me again how Bitcoin isn't a stable store of wealth due to extreme volatility." Well, I'm sure he's not laughing now. As the market returns to its normal momentum, Adamant Capital founder Tor Demester has today quipped on Twitter, "Is there a way to go long on Bitcoin volatility? I would if I could." On the week, the crypto is now around 2.7% in the red. Monthly losses are at around 3.4%. So keep this in mind when we're talking about this. This looks like a lot of movement, but it is only 3.4% over the month, 2.7% over the week, and 2 point something percent over the day. This is a lot only in comparison to the relatively low volatility that we've seen in the last couple of weeks. On a more normal day, a couple of months ago, when volatility wasn't anywhere near this low, seeing the markets go down 2 or 3% would have barely even registered. That would have just been normal. Having seen similarly stable trading patterns, Ethereum has today also been jolted by negative momentum, sliding steeply down 3% on the day to trade around $198 according to CoinMarketCap. Over the past week, the leading altcoin has also been trading sideways, showing only marginally more fluctuations than Bitcoin over the same time frame. This brings Ethereum to a 3.8% loss on its weekly chart. Monthly losses are at a much starker 14.8%. All of the remaining top 10 coins on CoinMarketCap are in the red except for stablecoin Tether, which is trading stably again. The hardest hit top 10 performer is 7th largest coin Litecoin, down 5.2% on the day to trade around $49 by press time. EOS is down 4.2%, roughly on par with Bitcoin Cash, down 4.25%. In the context of the top 20 coins, the market picture is similarly bleak, with all assets seeing losses of within a 1 to 5% range. Anonymity-oriented alt Monero is the least scathed, losing 1.1% over a 24-hour period to trade at around $101. And here you see, this article isn't very old. This article is only a couple hours old, and we do see the prices pull back a bit. With Monero, when I looked at it just now with you guys, it was down 0.1%, I believe. So it has already recovered some of its losses. We see some of that right now. It remains to be seen if the markets will recover from this in the short term or if they will continue going down. Tron is down 4.9%, IOTA down 4.23%, with Ethereum Classic pushing a 4.8% loss. Total market cap of all cryptocurrencies has slid to around 203.6 billion as of press time. Since its interweek peak at 211 billion, the market had held around or just below the 210 billion mark for much of the week before today's tumble. In crypto news today, and we're going to be talking about this anyway, so let's not read this out. But what we see here is the markets moving for the first time in a while significantly, down about 3% across the board. But keep in mind, this looks a lot scarier than it is. This is essentially just the markets going back to the volatility that we used to see every day. We have gotten so used to such narrow trading ranges in the last couple of weeks that this is pretty much a wake-up call to a lot of people, that volatility can return anytime, especially with the crypto market still being relatively small. Don't freak out about this. Keep in mind, if you're in crypto for the long run, if you've invested in projects that you believe in, that you think have impressive technology, have good use cases, then these short-term movements should not be worrying you. Keep in mind the potential of the projects you're involved with. Anyways, let's continue on with some actual news. I always like to talk about institutional money flowing into the crypto world, so with another company raising $30 million in funding, I'm of course gonna briefly mention it. Cryptography startup Starkware just closed a $30 million equity funding round led by Paradigm and featuring a number of other major investors, according to an announcement on Monday. Starkware, the company that developed the ZK Starks privacy feature, is now working to commercialize the tech, according to a blog post on the funding round. ZK Starks operate by compressing large amounts of data into small proofs and using zero-knowledge proofs to keep the information private. If I recall correctly, Zcash is running on this technology. Starkware wants to allow public blockchain networks to add similar privacy to their own protocols, and indeed co-founder Ali Ben Sasson previously told CoinDesk that there was plenty of interest in the technology. Privacy-focused cryptocurrency Zcash already offers a similar zero-knowledge proof system to its users. Well, I didn't even have to say it because the article itself brought it up. In Monday's blog post, Starkware noted that Intel Capital, Sequoia, Atomico, DCVC, Wing, Consensus, Coinbase Ventures, Multicoin Capital, Collaborative Fund, Scalar Capital, and Semantic Ventures backed the startup for the first time, with Pantera, Floodgate, and Naval Ravikant adding to previous investments. And if you've been keeping up with crypto news for a while, a lot of these names are familiar to you. As part of the funding round, Paradigm co-founder Matt Huang, I probably mispronounced it, I'm very sorry, will join Starkware's board of directors. The post also noted that Starkware's equity round is the first funding project led by Paradigm. It added, "We've assembled a world-class team of experts in zero-knowledge proof systems and engineering to solve two of the main challenges in the blockchain space, privacy and scalability." So here you see once again tens of millions of money, some of it coming from the crypto world, some of it coming from outside it, flowing into crypto projects, into research in the blockchain space. This is why I'm not worried about the future of crypto. We see so much development, and you just need to keep your eyes open and look for it. Because especially if you've been following my channel for a while, but also if you've just been looking at news in general, you'll see pretty much every day there is some article somewhere about a tech project, a blockchain project, raising a couple million, a couple tens of millions of dollars. That is happening pretty much every day, and those are the things that we know about. Those are the things that get reported about. So there's just so much development happening, so many companies are being started with good funding, with a good backing behind them, that are going to be developing so much stuff in this space in the coming years. Institutional investors have all this hope that they're investing in the crypto world, and I think we're gonna be perfectly fine, whatever happens in the short term, with all of this research, all of this development, all of this funding going on. We're building the infrastructure for a crypto future right now, and it might take a couple years to really reap the benefits, but they are definitely coming. Continuing on, another startup. But that startup is Ripple. You know I like to talk about Ripple, you know I do. But they got another big person from another tech company. They always like to do that. I feel like he was already involved in some way with Ripple before, but this is the official announcement from October 26th. Blockchain technology startup Ripple Labs Inc. confirmed to Reuters on Friday that it hired Amir Sahangi, who had been leading Google's rollout of a new wireless messaging system, as vice president of products. So just keep in mind here, someone who had a high, not necessarily a high, but a position of importance at Google, who Google, or rather Alphabet, felt was well equipped of developing, or rather leading the development of a completely new wireless messaging system, is now working for Ripple. This is not the first time that Ripple has hired away really promising and important people from major tech firms. This is just the latest in a long line, and this is one of the reasons I keep saying that Ripple has a level of professionality and just all around, professionality essentially, that is very rare in the crypto world. They have all these great people on their team and they keep adding to it. San Francisco-based Ripple, which is among the most well-known startups trying to capitalize on the technology that underpins cryptocurrencies, said it was excited to have Sahangi leading its efforts to develop a global payments network known as RippleNet. Alphabet Inc.'s Google did not respond to a request to comment on whether it had filled Sahangi's role as head of RCS or Rich Communications Services. Sahangi joined Google through its acquisition in 2015 of Jibe Mobile, a startup he founded and led that developed technology for wireless carriers to adopt RCS. The standard is seen as the successor to SMS texting, as it better handles sending multimedia and commercial messages, such as receipts and airline boarding passes, over cell networks. Google views those commercial applications as a potential revenue generator and has partnered with numerous device makers and wireless carriers to introduce RCS, but broad adoption has been stymied by leading device makers Apple, which did not support RCS on iPhones, and Samsung Electronics, which in September announced limited support. So the latest here in a long line of Ripple hiring really promising people who have achieved a lot already in the tech world in Silicon Valley. And this, once again, just one more reason to pay attention to Ripple and their products and all the stuff that they're doing in the background. Like these kinds of things, they do get reported on, but they don't usually, they're not usually the kind of thing that people who aren't already into Ripple pay attention to. You should be paying attention to this kind of stuff. There is so much stuff happening with Ripple and with their XRP token. Pay attention before it's too late. Anyway, continuing on. 9 Japanese banks to trial blockchain settlement using Fujitsu tech. Japan is of course at the forefront of a lot of blockchain development, and especially in banking, Japan is very far ahead, with a lot of banks already using Ripple's technologies in particular, but also with other corporations, with other crypto projects making strides to adopt crypto at a pretty accelerated pace. And now there is a major trial going on with Fujitsu. 9 Japanese banks are teaming up to trial a blockchain-based interbank settlement system using Fujitsu technology. IT giant Fujitsu announced in a press release Monday that it had been chosen as an application development vendor for the field trial that will use a custom digital currency to attempt to achieve low-cost transfer of small-scale transactions using real-time gross settlement. The test is aimed to gauge aspects of the gauge aspects of the tech, such as performance, security, and real-world viability. The 9 banks involved in the effort comprise a consortium called the Japanese Banks Payment Clearing Network, or Zengin, and include Mizuho Bank and MUFG Bank. Specifically, Fujitsu will build and provide the new trial platform using blockchain technology and will also utilize a peer-to-peer money transfer platform it developed in 2017 alongside 3 Japanese banks. That trial encompassed a cloud-based blockchain platform for sending funds between individuals as well as a smartphone app. Among its various explorations of blockchain, Fujitsu also partnered in September with the Japanese Bankers Association to provide a platform built with Hyperledger Fabric that banks within the group's ranks could use to test various business use cases for the tech. It further launched a ready-to-go blockchain consultancy service in July that it claimed can deliver a minimum viable product in just 5 days. So here we have even more banks in Japan looking to hop onto the crypto train. It's interesting to see here how many banks are trying to establish their own things rather than working with an established crypto company like Ripple or like Stellar. I think this is probably primarily down to large banks wanting to at least try and establish a company that they might have more direct control over, a technology that they might be more directly involved in, which might result in having more control over technical aspects, in having lower fees and all that kind of stuff. Now, how well this works will ultimately be important in deciding if they will continue going on with this, if they will switch to using one of the established crypto tokens instead, like XRP or Lumens, or if they will just not use blockchain at all. That is also a possibility, though I personally think in the long run, if these technologies take off, all banks will pretty much have to get on with this. At some point there will be too much pressure mounted from banks that have already adopted this for banks who haven't adopted it not to do the same thing. You have to keep in mind here how just basic workings of an open market. If Bank A is using, say, Ripple's technologies, is using xRapid, and has been able to offer international monetary transfers within 5 minutes instead of 2 days, and for 75% less money, and Bank B still takes 2 days for international monetary transfers, and their transfers cost 4 times as much money, who are customers going to choose? And once all those customers start moving over to the cheaper platform that is using blockchain technology, to the bank that is offering a much cheaper product because their costs are so much lower, then other banks will be forced to follow suit if they don't want to lose their customers. And this won't be a fast process. This will take a while. But this means sooner or later, unless something goes terribly wrong with blockchain technology in finance, sooner or later, major banks will be forced to adopt blockchain technologies. The only question is which. And I'm personally very hopeful that a lot will adopt the RippleNet suite of products. But there's definitely space for other technologies in this massive realm as well. Let's finish this video up with one last piece of news. And this is just a report on a recent podcast episode. I believe it was a podcast episode, yes. And some statements made by the Fidelity digital assets lead within it. Sorry, something was just stuck in my throat. Just 2 weeks ago, as reported by Ethereum World News, the crypto industry at large was shaken to its core as Boston-based Fidelity Investments, a multinational investment services corporation, revealed plans to launch a digital asset-centric subsidiary for the firm's 13,000 plus institutional clients. The startup, dubbed Fidelity Digital Asset Services, is headed by Tom Jessup, who hopes to offer top-of-the-line cryptocurrency custody for FDAS customers. Along with offering custody, Fidelity's cryptocurrency offshoot will reportedly handle trade executions for its clients, aggregating data on exchanges that comply with the so-called Fidelity standard before executing transactions on behalf of its clients. While the aforementioned is known about the project, specific details surrounding Fidelity digital assets are still rather scant, prompting Tom Jessup to sit down with Laura Shin of the Unconfirmed and Unchained podcast series to discuss the crypto foray. Explaining the origins of Fidelity digital assets, Jessup noted that the organization began its foray in crypto during 2014 when a group of folks internally were really focused on this thing called frictionless capital markets, which was focused on making financial systems more accessible, efficient, and cost-effective. Per Jessup, blockchain technologies immediately became a topic of interest, adding that through Fidelity Labs, research started to commence on the use of this innovation and digital assets in financial products and platforms. This led the firm to foray into Bitcoin mining while also allowing employees to purchase in-company cafeteria items using Bitcoin. This allowed Fidelity to learn more about this technology in general and the value that crypto assets can bring to the table of any organization. And eventually, after years of experimentation, the institution's top brass and internal innovational teams decided that it would be advantageous to do something closely tied to this industry, hence the creation of FDAS. And this is something underappreciated but important. It took them 4 years between starting to experiment and looking into crypto and Bitcoin in particular, and actually offering any kind of product. This is why I keep saying we need to be patient. Things don't happen overnight, especially in large corporations. A lot of people have to be consulted, a lot of research is done, a lot of meetings are had before anything happens. So all this momentum that we're seeing right now, we won't really know its impact until in 2, 3, 4, 5 years. When all those things that are happening behind closed doors right now, when we find out about all of them. So don't be discouraged if you don't see the markets moving as quickly as you want them to, if you feel like there's not enough happening in the crypto space right now. All these things take time. All these large companies that are looking into the technology, that are considering doing something with it, they need time, and we should give them that time. As put by Jessup himself, the crypto offshoot's goal is our vision is to provide institutional brokerage capabilities for family offices, hedge funds, other institutions that are or want to invest in digital assets. Some notable capabilities include top-notch custodial solutions, as aforementioned, and price discovery support, which will be done by giving FDAS's clients access to interrogate a number of liquidity providers and market venues to allow for the growth of the service. Confirming a popular misconception and responding to Shin's query about a Fidelity-backed exchange, Jessup noted that Fidelity's crypto team would rather be focused on developing high-quality market access products for our customers, implying that more exchanges aren't a necessity at the moment. Shin went on to ask Jessup about why crypto asset custody is one of FDAS's pillars. Calling custody a cornerstone, Jessup first noted that regulators require institutions to have a custody asset access to invest in crypto, then adding that FDAS's services wouldn't have been comprehensive without proper custodial services. Elaborating even further, the former Goldman Sachs executive noted, "We've come across a number of clients who have reasonably large positions in crypto that are held in self-custody and a number of customers who cannot execute orders to purchase digital assets until they have a custodian. So I think there's a lot of pent-up demand right now." And to elaborate on what he said here for a moment, this is why we're seeing so many companies in the crypto space try to become a custodian in the recent past. I believe Coinbase just became a custodian in some states, and another exchange also did. We will see more movement like this because becoming a custodian means you can offer so many more services, you have so many more opportunities, and it opens up an entire wing of institutional investment. Closing of the podcast, which stretched out to 20 minutes, unconfirmed showrunner Shin asked the FDAS head about where he sees crypto heading, especially considering the arrival of Wall Street in this budding asset class. Seeming optimistic, Jessup issued his final comment. I think we are starting to see an acceleration. I don't know what phase, innovator, early adopter, early majority we are in, but I think that with some of these recent announcements, our announcement, Back's launch, Harvard, Stanford and MIT allocated into this asset class, we are now seen as this really interesting and transformative asset class. So we can expect more news heading into 2019 that raises the bar and helps growth in the crypto and blockchain market. So we see here another very, very positive voice, another one with a lot of hope for the crypto markets. Now that is of course to be anticipated here. He is running a platform that aims to make a lot of money off crypto that wouldn't have been founded if they weren't positive about crypto. But this gives us some more insights into what exactly Fidelity is even going to do. We are still kind of missing a lot of details about their services, but being able to pick the mind of its head a bit like this in this podcast gave us some more insight into what they're aiming to do, what kind of audience they're going for, not audience, like consumers they're going for, and the takeaway from here is one more person who sees an acceleration in the market. As I keep talking about, a lot is happening. It might not be instantly reflected in the markets themselves, in the prices, but at some point it will be, and this is just accelerating. There is so much happening and more will happen in the future. With that, I'm going to end today's video. As always, thank you so much for watching, and if you want to get more of these daily news updates and crypto market and analysis, commentary, whatever you want to call it, videos, do make sure to subscribe. And if you like my channel, if you enjoy this kind of stuff, I would really appreciate some support. There are a million ways to do that in the description, with the most interesting probably being Patreon, where you can become a supporter for $1 or $3 a month, and that does come with perks that you can check out through the link in the description. Thanks for watching, and I'll talk to you guys tomorrow.